Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing. Lots of red on the board in the grain and livestock futures complex on Friday. And DuWayne, really, we had government reports out, USDA reports on Friday, both quarterly stocks and the small grain summary, but that's really not what we were trading. It was more about the government shutdown, wasn't it?
It really felt that way. It felt like the bears were going to come back in and sell this market really no matter what the report was from USDA, because corn rallied going into this report, and I've been a bear of the corn market as well, but I was afraid to sell it as well because I was thinking, well, what if USDA says, we lost 150, 300 million bushels from last year's crop size? So we got through that USDA report, which was actually a little bit friendly for corn, and boy, the bears really came in and sold this market. And I think so much of it has to do with actually the government shutdown and uncertainty there. Remember when the government shut down, we don't have weekly export sales. We don't have USDA sales flashes. We don't have a feeder cattle index. Might not have a USDA October report. So we get left in the dark a little bit. And if you're long and making any money in any contracts, I think this afternoon you found yourself saying, I'll just take my longs off and take my money and go home.
Right. Plus, you add in that it was end of the month and the end of the quarter. That didn't help either, did it?
No, it didn't. We had everything kind of stacked against us this week. It felt like, the end of the quarter was a big deal as well, too. And end of the month, end of the quarter, I think that had especially hurt the cattle market, and getting guys out of long positions there if you're profitable, of course. But, and then we got, looks like a fairly open harvest weather next week, and harvest, sounds like some of the yields coming in better than anticipated. So it's just one thing after another snowballed for the bears on this day.
If you look just at the reports, though, corn, we actually had a little bit of a friendly story there with that 1.36 billion bushels quarterly stocks number, didn't we?
Yeah, if you looked at just the report, you probably could have traded up 5 cents. But, I got to admit, I think the bears would have came in and sold it anyway, and maybe you're down 1. But, boy, we finished down 12 on the day into the last ticks. It was an ugly day. So, no, the report was just fine for corn. I think the thing is, like I said, it wasn't that bullish surprise the bulls needed that, we lost 150 or 300 million bushels. And earlier in the week, remember, we've been waiting for China to come in and buy from us, right? They could always be the one that turns the tide. And now our export demand is caught up. Well, the trade rumors this week is that they bought from Ukraine and they bought from South America. They didn't buy from us. And I think that really added on to the end of the week here and really piled into the bears.
Yeah. And the reports actually leaned a little bit bearish for both soybeans on the quarterly stocks. And then really in the wheat, it was more about the higher spring wheat production there, wasn't it?
Yeah, it sure was, which we've been talking about that a little bit. Very surprised the spring wheat yields were much higher than anticipated this year. We were really hot and dry early on, thought being a cool season grass, that's going to hurt it. A lot of guys were telling me 80 bushels an acre fields, and I couldn't believe it. Now, obviously, not everyone was that lucky, but yeah, spring wheat yields came in quite a bit higher, but all 3 classes came in a little bit better than anticipated. Now, the wheat supply situation isn't that bad in the report. It wasn't that bearish. Neither was the soybean, but they were a little bit bearish, and that opened the floodgates for some selling. And it seems like Chicago wheat maybe got to this point of, you know what, we're going to go down and we're going to find some demand then. And right now, wheat is fairly cheap in the world. Russia always putting pressure on the low side of the wheat prices globally. And like I said, feels like Chicago wheat's like, we're going to go down and find some export demand ourselves, which isn't always bad, but hopefully they find it pretty soon.
Yeah, it was pretty ugly. Chicago wheat at contract lows, and then you had like 2-year lows in KC wheat, and Minneapolis didn't do much better there. Let's talk about a few of the technicals. First of all, corn weekly close was down just 1 1/4 on the December contract, but we closed just right above another area of support, like right around 475. I think a lot of folks have been watching. Do we hold that, do you think?
Yeah, sadly, I don't think we hold that, Michelle. I think this week failing to get above 490 is almost a bigger deal, that the bulls just aren't going to win out in this. Back below the 20-day moving average, I think we take out the contract lows eventually. I don't think harvest lows are in for corn yet.
Soybeans. Okay, we took out the August lows. How bearish was that here today?
That wasn't good because we've been holding that on ideas that this crop isn't as big as anticipated. And we closed below that 1282 support level. Next one I'm looking at on my chart over here is that 1256 area. That was the low we got to in early July. That probably holds because remember, our soybean crop is still fairly tight. Our situation is fairly tight. El Nino is still going on. Argentina is still dry. But Yeah, I can't guarantee it because the funds are still long this soybean market. And if this government shutdown continues and they just don't want to be in any long positions, well, guess what? If they're going to sell the market, then it's going to go lower. But that would be the next support, which is another 20 cents down from here. So look for us to grind lower next week, I'm afraid.
Yeah. And November beans were down 21 cents for the week, but down 25 cents today. So we lost most of the week's gains in one fall swoop here. Nice. What about the wheat market? As I said, new contract lows there in Chicago, Kansas City. I mean, where do you find support even on these charts anymore?
You kind of don't. You got to now start going back to weekly continuous charts and things like that to find support. And I'm not seeing a whole lot anytime soon here. And I think today was more of a just get me out no matter what. Yeah. Nobody cared if there was chart support. They didn't like the report from USDA, even though it wasn't horrible. And they sure as heck didn't like the government shutdown and the higher US dollar that's been trending. So right now, I think you just watch the trade action. The trade action says it's going lower. We'll have to dig through some charts a little bit more to find some support, but it looks pretty ugly in wheat right now.
As we start a new week next week, do we see continued pressure in all of the markets because of the government shutdown?
I think we probably do. We don't have to be down to this degree every single day, obviously, but it'll just be that dark cloud that hangs over top and makes it really hard to rally a market. You know, are you getting the export sales? Are you getting the daily sales announcement? We won't know, right? So, you know, I guess you could say that's some uncertainty that maybe we got to buy the market in case China is in there buying, but I think they proved this last week. They're not at these prices. So, no, I think it just, that and harvest pressure keeps grinding these markets lower. It's a little depressing today, actually.
Yeah. We also had lower weekly closes in the live and the feeder cattle futures, and we kind of scored in the live cattle anyways, key reversals again here today, didn't we?
Man, that was an ugly week in the cattle market. Well, ugly, confusing week, put it that way. Start with the live cattle side of it. You know, we flushed lower, felt depressed. They were following feeders that were just crashing earlier in the week. And then we get this nice reversal in October, made new contract highs. I think it was just yesterday. And now today, give it all back and then some. So why? I think it's the government shutdown. And remember, when we talk the live cattle and feeders together, the funds are very long this market. And they've also made a ton of money over the last several months. So if they're uncertain about the government shutdown and also worried about maybe a possible 2024 recession, it's really easy to just say, well, I'm not selling the market, but I'm going to get out of my long positions. And I think that's really what happened here, Michelle. Now, sadly, that's the first thing that happens, the top of market. I'm not ready to call the top in the cattle market, but I am really concerned, Michelle. This isn't good trade action. And I'm a little concerned about a recession in 2024. If these fuel prices keep going higher and interest rates stay high, it's got to be a concern.
Yeah, we did have PCE data out here today, which actually came in maybe a little friendlier than some had expected. So I don't know what that will do for inflation and the Fed moves going forward or recession. I got to ask you, though, when you look at the cattle market, is the fact that we had such volatility this week also a concern in terms of maybe some topping action?
Yes, it is. You know, before we've watched this market rally, right? And every pullback we had was a great buying opportunity. It took about 3 days later and the market soars to new highs. So anyone who wanted to call the top was wrong. And the funds came in and stepped in and supported their long positions and bought more. This type of trade action, this type of volatility does suggest a possible top. And that's why I'm nervous this market here. You know, you don't pull back quite this hard on a bullish market. Now, the fundamentals weren't bad this week, Michelle. Cutouts are still above 300. Cash was maybe down about $1 in cattle. So the fundamentals weren't horrible, but it's just, oh, that trade action doesn't look good. And remember, these packers aren't stupid. If the futures market tanks because funds are getting out of long positions, they'll pull their cash bids and make them lower. So this could be the end of the fundamental bullish news too.
Well, that's sad, but true. Hogs down as well, and most of that was due to the hogs and pigs report. Didn't show the contraction that we thought we were going to see, right?
No, we assumed, 1, maybe even 2% lower year over year. We've seen that for a long time in hogs. Where it came from, this surprising bearish report, was actually the hogs per litter. They're really increasing those. I think they're well up over 11 now. So that's where we got the all hogs back up above 100%. So Yeah, it wasn't a horrible report, Michelle, but it was a bearish surprise is what I'd call it. And we rallied sharply Thursday going into that report. So we gave that all back and then some today on government shutdown concerns. So not a good market there either. I really don't have much for good news. I apologize.
That's okay. It's one of those tough down days when you have risk off selling across the board. Hogs, just like cattle, the setup, the funds are really long there. Do they get spooked out of this market and start heading for the door?
Right. They sure might. I mean, if I was long and making some money and had government shutdown and looming in front of me, I'd take it off and exit too. So yeah, I don't blame them for doing that. It's too bad to have all this government uncertainty moving forward, but it's what we got. So we'll play that card now.
All right. Just what the market does not need right now.
Right.
All right. Thanks for joining us. DuWayne Bosse with Bolt Marketing. That is Markets Now.